And this is why seasonal data is probably one of the single most important things when you're looking at month over month changes. So I'm seeing people already kind of calling in that potentially we might be hitting a bit of a bottom because prices crept up a little bit in September. Those of you who watch the channel, you could see it a mile away. September was coming every single year, despite how weak the market is. Prices will typically trend up in September and October. We already know next month is going to be the exact same story. We're going to creep up a bit, but we're still ending the year flat or possibly a net negative. So are we at a bottom yet? I mean, highly unlikely at this point in time, and I'll get into the details of that later, but here's what is happening. We're following seasonal trend, as you can see right here. So prices have gone up, but we're still actually below the median of where we ended 2024. So we're actually having a negative year so far, and we're likely not going to see much in the way of price appreciation going forward. In fact, if you look around, just about everywhere prices are sliding down, regardless of asset class. Maybe you'll have some townhouses here and there that are actually doing well, but in general, prices are trending down, with Toronto being the exception as always, because so much dollar volume goes through the city of Toronto. You know, it's kind of actually pushing everything else up in the GTA. We're going to dive right into it. So let's get right into it. All right, so let's put things into perspective. This graph is probably one of my favorite ways to illustrate what is happening and why every single market is operating at its own wavelength and just completely different factors are impacting it. So the top line here, by the way, this is the city of Toronto only. So this is top line is detached homes in the city of Toronto. As you can see, they slid down substantially median price wise over the summer, and they popped off again in September. Townhouses sliding down. They kind of came up a little bit over the last couple of months. And then condos, this is the infamous condo crash of the city of Toronto, effectively just prices sliding now slowly and gradually, right? So this is what a crash is. What does this mean? The big thing that we haven't actually talked about in a long time is the spread between detached homes and condos. And this spread has grown substantially since COVID and hasn't really come back to call it a normal time. So in the past, the spread was, if I recall off the top of my head, about 400,000, maybe sometimes less. So condos were here, detached were here. So call it a 400 delta will get you from a condo into a detached home. That delta now is substantially bigger. We're talking probably plus $600,000. And this is part of what's slowing down the market. You have all these condos that cannot be sold at old prices, and you know, sellers are chasing the market on the way down. And also for these people, typically they want to upgrade to a detached. They can't because the prices have run away. So prices of detached homes are still way higher. And it's not because they're way higher, but condos simply never kept up with the appreciation of detached homes, which are ultimately now a luxury. It's not something you can get into. Why that's important is because these people are now going into townhomes instead of detached homes because the spread is a little bit more reasonable, where you're talking about $300,000 to $400,000 in delta to get from a condo into a detached. So remember this because it is important, because this is what the data is showing us in terms of why certain things are moving the way they are and why detached homes are still on their way down, despite obviously the city of Toronto seeing a bit of an uptick here. Now let's take a look at the exact same graph, but for York region. So this includes the new markets, Auroras, Markhams, Richmond Hills, etc. So everything kind of all in, lumped in. As you'll see, there's way less variability in terms of pricing altogether, just month over month. And it's more consistent here. So for example, detached in the 905 obviously took off substantially during COVID, and now it's on its way down visibly. You know, we couldn't actually see this downward trend as clearly earlier in the year. And again, it will depend from which municipality you're going to. Like Stouffville is going to be different than Markham, than Richmond Hill, the Newmarket. But it's very clear prices are on their way down. Now, townhouses last month actually had this substantial correction. But again, it's now gone, also trending down. Condos, you know, up and down, but gradually on their way down. Now, the 905 condo crash is nowhere near as gnarly as what's happening in 416. But again, the trend remains. So the question I get the most, that I've struggled with for the longest time in terms of how to answer, especially for downsizers, is, you know, is this a good time to sell? And what's being really asked is, am I going to make a mistake if I sell now? Like, am I leaving money on the table? And really, it will depend on where you're going next. If you're just selling to liquidate property and you need to sell in the next 24 months regardless, whether you sell now or next year, I don't know that it will make that big of a difference. So at that point, you should really be selling when your specific area has little in the way of inventory, where you're hopefully one of the only or few listings that's actually available for sale, just to make the sale process much easier. So you're not lingering there for 6 months. But the other thing is, if you're going into a condo, remember that before COVID, the spread between condo and detached was maybe $500,000, and the spread right now remains higher than $500,000. And COVID was a black swan event, so this is not going to happen again. Nothing like, at least I hope not. But it distorted the market substantially, and that changed people's expectations. So realistically, it seems to me, again, in general, it will depend on your situation. If you're to downsize, you're still better off downsizing in this market today than you were under a normal market circumstance in 2019. Now, obviously, this is all debatable. It depends on where you're selling and where you're going, but I'm just talking general terms. The spread is still higher, meaning it's still tougher for a first or second time home buyer to move from a condo to a detached. So that usually means it's more beneficial for the person downsizing, because you're going to net more money than had you done this move back in 2019, as an example. One of my favorite graphs to look at is right here. It's the liquidity, or how many properties we're actually selling. And it's no secret that the first 6 months of 2025 were probably the worst on history in terms of how poorly the market behaved. There was literally no liquidity. Homes were not selling. We hit some all-time lows in terms of transactions. So as you can see, let's say in the month of March, we're typically doing 8,500 homes. We're selling 8,500 homes. We only sold 5,000. So this is a substantial drop. And this kind of continued. And a lot of this is because of the rhetoric from the South. So for example, the tariffs and all that other stuff, right? So now that it's subsided, you're starting to see liquidity come back. So in September, we're usually selling 7,600 homes. This time we're at 5,500 or 5,600 almost, which is a good sign. So as long as these two lines get closer together, where we're selling close to what we typically do based on seasonal norms, immediately once there's liquidity, things start moving and people are just less afraid in terms of like the market in general. The new active listings, or the new listings that are being listed, is not as big of a concern. This number is going to remain inflated because there's just a ton of stuff in here that's just not selling. It keeps getting relisted and it comes up in the stats as a new listing. Also, most of it condo driven, because that's where the real issue is. Now, obviously, we are actually at above seasonal norms in terms of detached homes as well, in terms of new active listings. And that is, again, we've had 2 to 3 years a really slow market, people taking listings on the market, off the market, and just playing that game, and it's just distorting the stats. But most important of all is this is starting to close up here, so we are getting liquidity. The question is going to be now, okay, we had an interest rate cut already, likely going to have one more. I think the probability of it is like maybe 50%, maybe a little bit less. Is that really driving much of a difference? I mean, hard to say, but right now mortgage rates are in the threes. You can get a mortgage rate in the threes, which has really improved affordability than, let's say, even 12 months ago. So it is looking positive. The one thing that remains a question mark is unemployment, because again, obviously people are concerned about their jobs, and if unemployment continues to rise, this could get impacted. And lastly, obviously active listings are almost at 30,000. So we're not breaking any records here, but again, the issue has been exacerbated by condos. We all know that if we're typically at 19,000 active listings in the GTA for the month of September, and we're at 29, so that's 10,000 listings more, about 6,000 of those are mostly condos. So the condo situation is really skewing everything here. Now, word to the wise, if the common mistake I'm seeing right now is sellers continue to try to hang on to past prices, even from 6 months ago. Those prices are not on the table. Unless you have some very unique properties, just not going to happen. So you have to stop chasing the market down. If you continue to chase the market down, you're just going to be a statistic right here, and you're going to be an active listing that is not selling. I have sold a number of properties over the last 60 days. And again, it mostly happens because we have realistic expectations, and usually we will sell within a week or two. On the flip side, I see things listed at some like completely out to lunch, prices that are completely not in line. And I don't know if it's a lack of agents understanding the market, the product, or potentially being scared to push back on the seller's expectation. But you're doing more harm to your listing and your probability of success if you're coming out at some exuberant price that is not reflected by the market. The buyers are simply going to shun the listing, and they're not going to come. You're going to get very few showings, if any. And you're just going to remain as a statistic. So word to the wise, take it for what it is. This market is not one where you're testing waters, coming out at some price, like a wish list price. It's not going to happen, and it will hurt. I've seen it time and time again where properties will come out, let's say at 2 million bucks, they were worth 1.8 at that point in time. They will sit for 6 months. They'll sell for 1.65 when they could have gotten 1.8 had they come out in the market at the right price.